Winston just said to me, Felix, what stocks are you buying in May? And I said, actually, I've got 6 on my mind. Have you got any in your mind? And he just started talking about cucumbers and carrots and how he wanted to go to sleep. Let's look at those 6 stocks. And I will not just give you the list. I will actually explain to you why I like them. I'll give you the data. In fact, you can download the data for free as well at felixfriends.org/May 2024. So you're the best informed investor out there and you actually get smarter from this rather than just running through it. I'm also running a live trading training where I'm going to show you how I make money as a trader. As a former banker, how I learned that, made 126% in 2022, 105% in 2023. And here is a fun trade I did yesterday. Meta, after earnings, 1 hour, literally 1 hour, $950. Sometimes it's like taking candy from children. And it's simple and it's systemized and it's automated and it's just anybody can learn this. I'm not promising you returns, but I'm promising you to teach you everything that I know in the whole system for free. So head over to felixfriends.org/training and we'll do it together live. It'll be fun. So let's get cracking. Netflix. Do you like Netflix? Do you watch Netflix? You probably do. Most people waste their entire life away watching Netflix. I don't own a television. But cash flow? Yeah. But it's growing very nicely. And the stock's gone up a lot. We don't like that, but it's very profitable. Now, is it expensive? Well, let's look at that in a moment. We'll come back to that. These were the horrible, the terrible, the nasty Netflix earnings that made the stock tank significantly. And I will also, by the way, run you through a trade for every single stock here that we are going to look at. Why? Because you might not be a trader, but I think it's important you understand how it works. And only then can you actually decide whether that's something you may or may not want to do, and you can learn. So revenue went up 15%. That's pretty good. Margins went up 6%. Operating profit margin up 7%. Net profits, that's real profit, up 9%. They spent a little bit less on tech. They spent a little bit less on admin. So overall, you would think that's pretty good, right? But they said that from next year onwards, they will not tell us subscriber numbers anymore. And we therefore all thought, oh my God, that must mean everyone's leaving and they don't want to hide it from us. How are they going to hide it from us when we see the revenue numbers? Try it, just think this through, right? The market is an idiot in the short term, and we can make money out of the idiot quite nicely if we understand a little bit more. I'm not going to explain to you what Netflix does. I think that seems a bit silly. The gross profit margins here are pretty good. Net income is pretty impressive. Return on invested capital at 17 or 18% and profit growth at 28% in the long term. To me, I always look at those two numbers and I go, well, that means it's going to go up about 18 to 28% a year. Not every year, not all the time. It's not a hard rule, but it's sort of my rough, guidance. It's the way Winston picks cucumbers. So I like it. But is there anything wrong with it? The 7 billion free cash flow in the last year, perhaps? That's pretty impressive, isn't it? And is it the fact that they are very, very consistently beating market expectations? And every once in a while, they give us an opportunity to buy the thing cheaper. Maybe that's it. Maybe that's why people don't like it. I'm not really sure. And is it that it's just expensive? Well, yeah, it's trading at 31 times PE, but so is every other tech stock out there. So you might think, okay, everything is going to go to, what, and you're just going to invest all your money in cans of sardines and ammunition and the backyard bunker that you're building. Fine. Okay, I'm not going to argue with you on that. I think being self-sufficient is actually going to be very, very important. I think food security is going to be the next crisis, but there will still be people who want to drown their sorrows and occupy their minds so they don't have to think about what they actually want to do with themselves and watch Netflix. And therefore, the year-on-year growth and profits that analysts forecast, sort of in the teens largely, if you just get that growth, in 9 years, you will own the stock at 7 or 8 times PE. And I suspect they'll outperform analysts. That'd be my expectation. So I like it. I like it. Doesn't mean you have to buy it. Doesn't mean you should. But here is another one. This is a little bit of a different business. SoFi. Growth, very good. Cash flow, yeah. Profitable, so-so. Relative value, the algorithm said, just don't talk to me about it. I don't know what that means. Price momentum, that's lovely. That's amazing. That should be green. It means it's gone down a lot. We love stocks that go down a lot, don't we? Is there anything you complain about when it gets cheaper other than stocks? Probably not. Start enjoying it when your stocks go down. Just go, brilliant, darling. The stock I just bought, it went down another 20%. You know what that means? It's on sale. Let's buy some more. So don't, when you start positions, don't put all the money in at the same time. Oh, hang on. I didn't run you through the Netflix trade, did I? I almost kept that one from you. Here it is. So we head over to optionswatch.io. And why do I look at this chart? Because left-hand side is a chart, the way what you normally look at if you look at charts. And then here in red and green, I see market positions. Where are people's trades? That's really what that says to me. And the red lines, the big red lines, are support. And where is the big red line here? It's at 550. So we get support at 550, which is funnily enough exactly where we bounced off. And on the way up, resistance 565. Where we're trading as I'm recording this, 566. You see the connection? The data really matters. So what would I do? Would I buy the stock at that price level where it's right now at 566? No, not as a trader, because 50-50 that I make money. As a long-term investor, it's a different story. But here, let's put on the trader's hat, right? We should get a hat that says trader. Would that be useful? Maybe, right? Long-term investor, trader. I'll get two hats. Maybe I'll get one that's split down the middle just to confuse you. What I would do instead is I would move my trade down here to 537. And that means, just write that on here. If we may. 537 is my trade break even. I don't know that. So what does that mean? Well, it means that the stock could fall. Get a bit better at this writing thing, don't I? Stock could fall minus 5%, and I still make money. Wrong. I'm wrong quite a lot of the time. I still make money quite a lot of the time, which is nice. How much money could I make? 26%. That's pretty juicy. It's a pretty big return. And so basically the stock can go any direction up, right? We make money. Sideways, we make money, or down minus 5%. Those are the three directions that we could make money in, and be a reasonable thing to do. It's not the perfect trade, but it does have a 75% probability of making money, which is pretty decent. Why isn't it the perfect trade? There is something called volatility, which is very low right now. It'd be better if it was a bit higher, but we don't need to get into that in too much detail. So that was Netflix. Remind me when we do get to SoFi. I'm pretending like this is live. I know this isn't live. It's pre-recorded. But Winston, will you remind me to do a SoFi trade? He says, let me out. He's more interested in being in the kitchen where food scraps fall on the floor. SoFi, you look at this. There's a teeny tiny green bit of profit here from the previous quarter, but we don't really care about that. Why not? Because it's a growth business. Lending growing, tech platform growing, financial services growing 115%. Wow. And they're spending less on sales and marketing. They're spending a little bit less on operations, less on G&A. And okay, a little bit of credit loss provisions. It's a bank. It's kind of normal, but it looks pretty good. Margins have gone up 17 percentage points. So they've just made a profit for the first time ever. And that virgin profit is a good thing to be in, because it's typically when the big boys, the institutions, start looking at it. Now, of course, SoFi is a competitor to the big boys, so they loathe it, they hate it, they're trying to quash it, squash it, sit on it, anything really. Gross profit margin, 81%, that's pretty good. Now, we know that they are making a small profit, so that'll soon be a green number here, so you can ignore that. As for the return on invested capital, ignore that, because they're about to make a profit. But earnings growth of 43% is fairly impressive, and therefore I like it. Now, anything we should worry about? Well, banks, it's not a complicated bank. It's a consumer bank. So they're not doing a lot of the funny, fishy stuff that the big banks do. So you can look a little bit more easily at equity, debt. It's kind of reasonable for a bank, and cash flow is negative the way it's accounted with banks. It's a bit complex, but they are bringing in 10 billion in interest income essentially, which is not bad, not shabby at all. And is it expensive? Well, yeah, right now it seems insane. 126 times PE. Now, the E stands for earnings, or rather profit, should be called PP, but it sounds a bit silly, doesn't it? And therefore, the number is meaningless. It's drivel. It's like, what does that matter? Go forward another year, it'll be 41x. It still seems quite a lot. But then go forward into 2033 even. And we can't go forward into the future, can we? Unless you are a very short actor in a strange red car with a weird professor as a friend. We're getting the stock at about 4x. So time in the market is what typically makes you money with stocks like this. So what do we do with that? Well, let's open SoFi. So what I've done with it is I do short-term trades. I do two things with SoFi. I do one, short-term trades that look a little bit like this. We go down to sort of $6 or something like that. We make maybe an 11% gain in about 20 days or so. And we're again positioned at this gray line down here. I'll put in the thick blue line here. That thick blue line is where my trade might be. And therefore the stock could literally drop 22% and we still make money. So that's pretty good. And why is that also pretty good? Because I know there is support at 7, that red bar there, and there's resistance at 8. So the stock's locked between 7 and 8. And look at the chart. It's been trading between 7 and 8 for absolute ages. It's almost as if you have the right data, you have an edge. You do. I'm going to get yourself a copy of Options Watch. It's free for the first month. It's very, very inexpensive after that. And by the way, all the money you give us, we reinvested to make it better. So we gave you more data, more. We've got like the coolest freaking indicator coming up. It's so freaking accurate. It's scary. That's coming up. What's the other thing you could do? And again, I'm not recommending this. You could do a really long trade. So you just buy a call option into 2026. And you're basically saying, as long as we go up, say we went to, Anthony Noto gets paid when we go to sort of $35, right? That's where Noto gets paid. That's a lot. Most of the share options are locked up above $35. If we made it $35, we would make an 800% gain. And this could be a $300 trade, and we would make $2,500 profit. We might want to go here and make that a little bit cheaper. So now it's a $200 trade, and we make 1,000%. So I also have some of these open, and I add to them on dips, and then I kind of wait. And it doesn't mean we have to go to $35. We just have to go up a bit. We go up a bit, and we can take profits, and we can rinse and repeat, and I kind of keep doing these things because they could really pay off quite nicely. But again, not financial advice. So PayPal. The stock that Elon's about to crush, that Apple is going to take out of business, that is apparently such a terrible business that nobody would ever want to use PayPal ever again, except everybody does. Cash flow, so-so. Growth, so-so. Price momentum at a D, that's amazing. That means the stock's like cheap. Profit health, glorious, and it's cheap. Did I say that in a rather high-pitched voice? I got a little excited. And let's look at, this is their last earnings. Now, the new CEO hasn't really done much with this yet, so you can't really judge a lot. But net profit margins did improve, which is positive. A little bit of saving on expenditure. I would expect there to be a lot more expenditure slashing and margins to gradually but slowly improve. Is that a word? Slowly? Probably not, right? What's the word for that? Let me put it up in the comments. This strange German who speaks a really weird accent, right? Gross profit margin could be better. It's sort of like, nah. But revenue is still looking pretty good. Profit's looking very good. Return on invested capital at 12% is just on the edge of where I like it. And earnings growth is a bit miserable. So not great, but have a look at the stock chart in a second. And also, 4 billion free cash flow. Winston just sighed and said, I know, it's a good stock. What are you going to do about it? And management last quarter did actually deliver a pretty decent beat. Ignore all the numbers below that. They have been all right. Previous management was basically just like brain dead. And it's cheap. There, I said it again. 12.5x at the end of the year. And if you just believe that it would not really grow very much, then you're going to own this at 3x, which means you get a 33% shareholder yield. Try finding that out there. Good luck. So PayPal, how do we trade it? So if you go in the short term, we go into May. Support sits down here at 55. So you pop that in here. Supports at 55. Resistance, as they say in the chosen country, is 65. So 65 resistance for May and 55 support for May. Okay. It bounces around, right? Just above the resistance lines, sort of that $65 is sort of where it's been making out with the 50-day moving average line here. What does that mean, therefore? Well, I'm not really trading this short term because I think it'll take them maybe a year to improve this business. So I'm going to play it reasonably safe and again do one of these crazy nut job trades, go out 2 frickin' years and say, I'm going to spend $3,000 on that. No, I'm not. Let's go to $65 here. $1,500. And what happens if we go, say we go to $95 or $100? Well, we make 120%. If we went a little higher, which if you zoom out, does not seem totally unreasonable. And I go back further than 2 years on this chart. I can actually. Brilliant. If you go into March 2022, we were at $121. Well, at that point, I would make 270% return, which is not terrible. We got a little 290% return. So that's more like my play. It's a long-term play. I've closed one of these trades already this year and made about $2,000-$3,000 profit on it. I've got another one open right now. And on dips, again, I add to this a little bit because I think fundamentally the stock is undervalued and I believe management will pull it out of the hat like a rabbit. We got a rabbit lying around? No, just a kitten. Kitten isn't available. Are you available? Good boy. There is Winston, and there is what we'll have to do as a rabbit. There we go. Winston, any thoughts on the next one coming up? Palantir? Are you a Palantir fan, Winston? I think he might be. Oh, this one's very sleepy. I wake her up. I'm in trouble now. There we go. So Palantir, cash flow, cha-ching, growing like mad. Price has gone down a little bit. We like that. It's not super profitable yet. And it screams, oh my God, it's too expensive. Don't touch it. It's dangerous. Let's look at the numbers, right? Let's not judge too soon. Winston, shall we not judge too soon? So Winston, what do you make of the earnings details for Palantir here? Profit margins improved 9 percentage points, Winston says, which is true. And it's good to start on the right side here. The bottom line is ultimately what matters. They saved some money on S&M. You know, they closed the bondage basement and no more leather gear for Alex Karp. G&A, which is something really kinky, is also down in terms of expenditure. Spent a little bit more on R&D. Not quite sure what that really means for Palantir, 109 million on R&D. Future product development, I suppose. Maybe coffees for the 5 daily demo events that they're running. And still word on those. I love those AIP demo events to do. You know why? There isn't a salesperson in the room. It's engineers and existing customers showing potential new customers what they do. And that's how you sell when you have a good product. You don't need to sell. You just show people what you do and they go, oh my God, that's so freaking cool. How can I get this? And then you say to them, you may have the first taste for free, my child, which is the old drug dealer method of selling, right? So Palantir is essentially a drug dealer who's got a product that is good and it's addictive. So you give everybody their first taste of it, their first hit, and then just like bankers, they're going to be all doing this and going, I need more, please, anything, I give you anything. I steal from my parents, my shareholders, anybody, customers, I'll charge them more, just give it to me. And that's why I like Palantir. I might disagree with the method of selling, but it's bloody effective. I think you know what they do, right? If you don't, well, I'll help you with that. Actually, I can. I made a video the other day. I said explaining Palantir in 2 or 3 minutes. I think it was 5, so I lied. But gross profit margin, it sounded better with a 3-minute in the title than a 5. Gross profit margin is wonderful. It's sort of Bill Gates type perfection. Everything stands erect. Probably not a word one should put in the same sentence as Bill Gates these days. Net income, look, they've made money. They've made real money for the first time ever. And it's not just interest income, it's actually profit. So return on invested capital is a number you can ignore. It's still too early. Give it another quarter or two. Long-term earnings growth at 26% is still pretty impressive. So yeah, I like it. I like that. I think the numbers are solid. And given that they're giving away the cocaine for free, it's actually even more impressive. And they do have free cash flow, about $700 million worth of it. Actually, it's a bit more. They said this number is going to go up to $1 billion plus this year, and suspect they're going to use it for buybacks. So that would be good. And yeah, they sort of meet market expectations, but there really is, I don't know why a 0 is red here and not 0 is green. Can someone explain that to me? It's not exciting, right? They're not beating in an excited manner. I think we might need another year or two before they start beating in an excitable manner when they start charging their addicts for the software. So right now it looks fairly expensive, but given that they've only just made a profit, the number is a bit pointless and a bit like analysts, really. They're also fairly pointless. So I wouldn't pay too much attention to it. If you just believe that growth will slow from 280% to like 20% on average, you're going to get it at 13x in 9 years if you were to hold on to your shares for 9 years. Now, I did promise you a Palantir trade, and Winston has very kindly reminded me. So let's look at the May setup here for this. Let's zoom in a bit. Okay, where is support? Don't really see much, to be honest with you. There's a bit there at 22, which is where we're trading. It's a bit at 20, but not a lot. Resistance, however, at 25 is a pretty big middle finger. So hard to break through 25. Just write that on here. $25 resistance for May. And that's sort of generally been the lid on the party here for about the last 2 months. But yeah, support's a little on the weak side. So I wouldn't really, I guess I would look at the bottom of the gap up here, which was at $17 or $18, but there isn't much here for that. Is there at some other level? 22? I think 22 is really the point, probably. So we're trading very, very close to it. So yeah, 22. Let me put that in here as well. 2022 support for the beautiful month of May, when people feel frisky, apparently. Do you run around poles or something? No? I don't mean, okay, anyway. Let's move on, right? Let's not get too inappropriate. So what would you do with this? I'm not doing a lot with it, to be honest with you right now. I think pricing right now is a little lofty. I agree with that. I would maybe nibble on the dips. If earnings come in and give us a dip, yes, I will nibble. But other than that, I'm kind of waiting. We're just moving sideways, right? Between support and resistance, been doing that since February. So not a huge benefit in doing something massive here with it. You could possibly sell a put option. So say you wanted to buy the stock. What you do is you say, okay, I don't want to buy the stock, but I want to buy it at $19. Okay. And then you set that up for the end of the month. And what happens is if the stock stays above $19, you make 4% return, which is not bad in a month. It's actually pretty good in a month. And if you drop below 19, you buy 100 shares of SoFi at $19, which is better than buying it at $22. Plus, you still get your 4%. So that's an interesting way to enter into a stock that you want to buy anyway. You have to have, obviously, the cash to buy 100 shares at $19, so you need $1,900 to do that with. But yeah, you're basically getting 100 shares at $18.28 effectively. So $18.28 is what you're actually paying for it, which is a lot better than 22. Now, if it drops to 15, you're still paying 18. That's the only downside risk, but it's still better than paying it at 22 and it dropping to 15, right? So it's sort of a win-win, really, I think. What about this one? For a company that old, cash flow pretty good, price momentum, yeah, I love that. It's gone up a lot, so it's sort of like but it's so profitable. It foams at the mouth and makes everybody jealous, really. And look at how beautifully diversified that business is. Look at all the different parts to it, and they're all great, and they're all growing, all of them. Servers, Azure is growing, cloud's growing, Office is growing, gaming is growing, Windows is growing, LinkedIn is growing, even search is growing. Yeah, some people have actually not figured out how to turn the Bing bar off after Microsoft forced it upon their computer and raped it with the Bing search bar, and they're therefore forced to use it from now on. Revenue up 17%. Operating margins improved a little bit, so management sacked a few people or just threw them out the window or shot them or something. And net profits up 1 percentage point, and it's a beat from Microsoft, beating all expectations. And it's Copilot, it's AI, they own the space, they have an ankle bracelet on Sam Altman. He's not allowed to go anywhere unless Microsoft says it's okay, son. And gross profit margin at 70% is pretty freaking sweet. On 227 billion revenue, they make 82 billion. I mean, they're literally, people smugglers, gun dealers, drug dealers who are crying looking at these numbers and said, Dad, I failed you. I did not exceed Microsoft margins. I should have just bought Microsoft shares, right? Rather than fund the latest uprising somewhere. Return on capital employed is 28%. Earnings are growing at 17%. Tell me, please, how the stock is not going to go up 17 to 28%. That's not financial advice. It's just my opinion and my, finger in the air. So there we are. Now, anything bad to say about them? Maybe it's the 67 billion of free cash flow, more than most small nations have. And look at that, their debt is 111 billion. They could pay that off in like a year and a quarter. So very, very well run business. Very, very well run business. And look how little they pay for their financing, 17 billion only. That's a massive, massive reduction. While interest rates went up, Microsoft's interest expenses have gone down. And is it expensive? Well, it's trading at 35x 2024 earnings, but yeah, it's not super cheap. But I think they're going to beat the forward guidance here. And even that brings you down to a 12x. So I know very few stocks as good as Microsoft. Really, it's just freaking brilliant, really. What's that all about? Oh no, this is something else, isn't it? Yes, this is something else. Okay, this is the next stock we're going to look at. Microsoft. Let's have a look at this. Is there some way we could trade it? Now, as I'm recording this, Microsoft just after hours is gone berserk and trading at $416 while it closed the previous day at $399. So it's obviously a massive, big, beautiful, bushy green rally here. And is it a buy signal? Yeah, I'd say it is. But there is some resistance going to be up here at 430. So let's just have a look at where does that resistance sit? And it does, of course, sit at 430. That's resistance. And the support sits at 390. And what did I say? 430. 430 resistance. And down here at 390, Winston, you're back. Support. You see him down there? Can't see him, can you? There he is. There's a nose. who's saying, I could be missing out on treats in the kitchen. There are 2 cooks in the kitchen and they're making food and I might miss out on scraps of carrots and cucumbers and all sorts of things. And so what could you do with that? There's a lot of things you could do with that. But it is at the moment a bullish trade. So you could set up a bullish trade somewhere below, ideally at the resistance of 390. That would be sort of the sweet thing to do, would be set up the trade at 390 and you'd make a pretty juicy profit, probably something that's showing 52%, but the market isn't open as I'm recording this, so it'll probably be more like 20 or 30%. But that could be a thing to do. You're just saying, look, it's just not going to go back to the low down here at 390 because their earnings were spectacular and all the arms dealers and drug traffickers in the world have decided to put all their money into Microsoft shares because it's just a better business. So yeah, I like it. I like it a lot. But I'm also a big fan to own the stock long term, quite frankly. Now, here is a stock that's called Hermes. And when you say it, you must snarl slightly and pretend you're French. A lot of French bashing in this video today, right? We have to take the piss out of somebody else here. The Germans, perhaps. I'm one of those. The French don't like the Germans anyway, so I can't really lose here. It's a win-win, really. Now, I lived in Monaco for a year last year, and when you sit in the cafes in Monaco, all the women sitting around you have an MS bag. And then they have, and the bag is somewhere between $10,000 to $50,000, just to give you a frame of reference here. And the handles of the bags have got little silk scarves wrapped around them very, very carefully, which also cost, $500 to $1,000 a piece. And they usually have 2 of those. That's another $1,000 to $2,000 on scarves there. Why do they do that? Because they don't want to damage the bag. And you might be thinking, if you aren't careful with it, maybe you can't afford it. No, it's not the case. Although you can't tell whether the women are housewives or prostitutes, because they all carry the same bags. It's very confusing. But apparently people need an Hermes bag. But if you're a wife or better half, and I know 95% of the viewership is male, if you are female, you are a special species. I appreciate you. There are not many of you, about 5 to 6 in total, I understand. Then buying an Hermes bag is actually an investment. Why? Because Hermes raises their prices every single year. And if you want to buy an Hermes bag, you can't just walk into the shop and say, I'd like that bag, please. I know it's $30,000, but here is my money. They will laugh at you. In fact, actually, they won't let you in the shop. They'll make you queue outside in the rain for a bit, just for fun. They have a strange sense of humor. And what you actually have to do is you have to buy all the accessory shit in the shop. The little horses, the toys, the keychains, the wallets, the scarves, the hats, the clothes. They have clothes which nobody wants, but you have to buy them. And then if you've spent enough and you've built a relationship with your sales associate who will continuously snarl at you and look down on you, then you might qualify for a bag. And then one day you're going to get the question, Madam, what bag would you like? And then you tell them, I'd like this bag and this particular shade of burgundy, and I'd like the beast that died for it to have been an alligator who spent its life in a glass cage so it couldn't possibly scratch itself, and it probably had its fingernails removed. It's a wonderful business, I know, all ethics and all that. And then you're going to get a call a few months later, and they will say, Madame or Mademoiselle, your bag is ready for you if you wish. And then you will go and see it, and you will still have this strange French terrible accent. And you will get to the shop and you will see the bag's yellow. I don't want a frickin' yellow bag. But if you say no to the yellow bag that you didn't want, you will never ever get another MS bag ever again. That is the sales principle of MS. And it's amazing. It shows the power of a brand that is so strong. They force you to buy crap you don't want. And then you buy an expensive item. I'm talking 5 figures plus here that you don't really want. They will never give you the right bag that you actually wanted. If you then continue this relationship, this abusive relationship, and, get buggered on the pavement for several years, you may eventually get the bag that you wanted. But what actually happens is that you're just going to go to one of those second-hand shops that are everywhere, because you can get the bag you want. You don't need to buy all the junk. You don't need to suck up to the sales assistant who's incredibly irritating. You don't have to need to queue in the rain. But those second-hand shops know that, and therefore they sell the second-hand bags at a premium, a significant premium over the new thing. And that's peculiar. They also know that prices go up every 3%. So actually, buying an Hermes bag is probably one of the best investments you could possibly make. There we go. Maybe don't buy the weird yellow color. Obviously, you're going to want to get one that's actually popular and so on. And then wrap little silk scarves around it so you don't damage it ever, and put it in a glass box, just the way the poor snake or alligator died for it. So that's Hermes, right? So I've explained that to you now. And therefore, it has gross profit margin like a software business of about 70%, which is staggeringly crazy. And the only way you achieve that is by torturing your customers, the way they sue. They say, they got lots of money. The stock's done pretty well. Not massively well of late, but pretty well. And why are we topping out a little bit? Well, the Chinese consumer is spending a little bit less freely than they were. It's a bit like the Russian story and that kind of thing. So we get these little dips. But yeah, it's a business. I rarely see something better. Look at their financials in euros, of course. 13 billion last year, 11 billion the year, 9 billion the year before, and net profit of that is 4 billion. I mean, look at that margin. That's insane, right? And very little debt, 10 billion cash on hand. So yeah, they have a lot of money. It's a very, very well-run business. And actually, their sales in China jumped. Look, leather goods and saddlery division, which is the crap you got to buy so you might be able to buy a bag. 20% up in the first quarter. Softer traffic in stores didn't hamper sales because people are desperate. And they've been buying for years, so they might be able to get the bag, and therefore they're not going to give up now. They're saying, I know we've got to put the belts tighter, but I'm getting that bag. And husband says, all right, dear, slightly scared of you, so you can have the bag. And then you realize it's actually a good investment. So there we go. Did we cover all the stocks we wanted to cover? I think we did. You can download all of the research at felixfriends.org/May 2024. And if you want to learn how we make money, how we make trades, how this really works, then it's much simpler than you think, honestly. It's a 3-step system. It's fully automated. Come and join me at felixfriends.org/training, live trading training. We'll do it live together. I'll answer your questions. I'll give you the whole system, the whole setup, how to do the automations and everything else. And if you enjoyed the video, share it with somebody, would you? Thanks for watching. Thanks for tuning in.
Felix here from an airport lounge near you. And I was just getting a message, which I get a lot. And the question was very simple. How do I actually pick great stocks?